Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. My guest is Kim Forssell, Chairman and CEO of Net Zero Enterprises. Kim, welcome to the show.
Thank you very much. Nice to be on the show again.
I'm glad that you're here. Now, Kim, give our audience an idea. This is our television segment. Give our audience an idea of what your company does, and then let's move into your current money raise and describe that for us.
Absolutely. So we are a asset development company or an asset owner. We build renewable energy plants, such as waste to energy facilities. We build other type of sustainability projects as well, such as water treatment facilities, organic food facilities, and so forth. Okay. We've been doing this for the oldest companies in our group is over 35 years old. We did a merger about 7 years ago, merged 3 companies to have the perfect mix of the competencies we need to move forward. What we see now with the blockchain development that's happening is that we can completely disrupt 2 major industries. One is the asset development world we're coming from of developing capital-intensive projects. The other industry is actually the finance or funding industry and fund management company, where a lot of company or fund management company lack transparency. They lack the focus that the targeted investment that the investors are looking for, and the people managing money is not following those trends. By combining a fund management company, which is Nets, and I will go into that, and our old Net Zero Enterprises company, we can therefore disrupt 2 industries. We can speed up the pace of how fast we can build projects and assets, and we will also save a lot of cost by doing so. So we believe that we have a great market. The response we have gotten so far is also very, very positive.
One of the things that we wanted to talk about today with each other is how you reduce the risk in your projects, and I'd like you to expand on that.
Absolutely. So we initially developed a risk mitigation model for a very large Swedish company called Vattenfall. Vattenfall developed new assets for about 5 billion euros a year. So we helped them develop a new model on how to deliver products on time and on budget. We did that very successfully, and they're still working with the model. We continue to develop it in order to not only focus on asset development or of these capital-intensive projects, but also on how to do due diligence, look at the investments, and risk mitigate investments. What we came up with is a model that has proven to be very successful. We built over 200 projects. We don't have a single default. And the model goes through and ensure that we have mitigated every risk that is identifiable throughout construction and through operations. And usually what we do is we have revenue insurances for the lifespan of the project. So they go out and they last between 20 to 30 years in time.
Talk to me about impact investments.
Impact investments is an interesting area. Let me start there. Historically, the problem with impact investment is that the investor has been looking to just for impact. However, if you can make the same social impact and the same kind of impact on the environment and from a sustainability perspective, but you also make money, you can then start to get an exponential impact, which is a huge difference because all of a sudden you get more money to be able to invest and you can then drive the impact exponentially, both from a sort of impact focus, but also from a financial focus.
Do you have any projects that you can talk about that fit this model that you're working on?
Absolutely. So we are involved in lots of projects where we have structured agreements with different governments. So we have, in a lot of projects, we have sovereign guarantees. You typically get them more from Southeast Asia and Africa these days. So we have a lot of projects with sovereign guarantees that makes a huge impact, both on creating work, but also creating renewable energy, we're creating clean water, we're creating sustainable food and organic food. And if you if we take our solutions and implement them, for example, places in Africa or places in other developing countries, the impact can be substantial, and it becomes multidimensional because you find synergies between the different impacts, so to speak.
What about the waste to energy project?
Waste to energy, so this is also interesting. Waste to energy has been, I would say, about 20 years we've been building waste to energy projects quite efficiently. The last 10 years, there's been a significant development to be able to couple different technologies together. So, for example, when we build a waste to energy facility, we always start by building called a pyrolysis facility. So you take plastics and you convert that into biofuel. That's always the first step that we start with in our facilities. What's good with that is plastic is a major problem in the world. It creates damage to the oceans, to the groundwater, and so forth, and it's not biodegradable. So our process, take the plastic, convert it into biofuel. We start generating cash flow already after month 4 with that, so very fast to cash flow. Then we add the 2 following components that we have in the waste to energy, and that is the actual waste to energy component, taking the municipal solid waste, convert it back to energy. The other aspect of this is also water treatment. So in a lot of cases, we combine these facilities with a water treatment plant where we can process toxic water or sewage or any kind of wastewater, and we can process that into potable water. So the combination then of combining plastics to biofuel, municipal solid waste to energy, and toxic or wastewater into potable water becomes a very good combination. And usually the cities or countries that are looking for this solution have both problem with the waste and the sewage. And that's where we come in and solve the main problem.
Two areas, geographic areas that come to mind. I think 1/3 of for the last 10 or so, or maybe even a little bit longer than that, years have been going. Our plastic waste has been going to Asia, and then obviously with the Olympics that we saw in Latin America, Rio de Janeiro, there was a huge problem. Are you seeing big demand in those 2 different locations?
Yeah, absolutely. I would say we see a huge demand all over the world. I mean, even here in the US, so I live in San Diego myself. If you take California, or Los Angeles as an example, they have 39,000 tons of new waste coming in every day. The landfills are full, so what they do today is they put the waste on trains and they ship it to Arizona. They pay about $65 per ton they're shipping away. So it's not just a problem in South and Latin America and in Asia. We have the problem everywhere. What we're seeing, though, is that the U.S. and a lot of the Western world has solutions that are sort of working, if you like. So they're working, but they're not efficient enough. So the landfills are filling up. You still have the toxic aspects of the landfill and destroying the groundwater, which then creates explosions and other issues. When we come in, we can mine natural landfills. So the landfills itself is a commodity for us, and it has a value. So we can mine landfills and just use that as our feedstock if we want to. And then obviously by taking new waste as well, we are extending the lifespan of the landfills as well.
That's commendable, highly commendable. I can see that there's like no limit at this point because of all the waste that's been stored, but you're also working with organic shrimp. Let's bring that out.
That's correct. And we started working with that about 5 years ago. And what we did, we acquired a German technology that's been very successful in growing completely organic. You don't have an organic stamp on shrimps today, but it is an organic shrimp. We have the blue label from Monterey Bay Aquarium, which is the highest standard. We're compliant to Whole Foods. So what we're doing and what we identified was that a couple of years ago, there was a big debate about slave labor within the shrimp industry. And it's not only the slave labor, you also have a lot of issues with the quality of the products. The shrimp are destroying the mangroves in Southeast Asia, where you primarily are farming them. But you also have a lot of toxic products in the waste. So when running an analysis on a shrimp that's imported and eaten here in the US, it's 99% of the cases is classified as a red label product. That means it's toxic for you. You shouldn't eat it. The average product, even if you buy it at premium stores, is frozen and refrozen about 5 times. And lots of tests you run, you find salmonella and other kind of bacteria that you don't want to eat. So, and to add on that, if you're looking at the problem with shrimp coming into the U.S., there's only 1% of the freight ships being shipped that are coming in. Out of those 1%, 90% is rejected, and they have to leave the harbor. But what the problem with in the U.S. is they can enter another harbor, so the product is still coming into the country, and that's what we're eating. So I stopped eating shrimp 5 years ago, and I would only eat the pure kind and the organic kind that we're farming, because the other kind is toxic. It's not good for you. The shrimp market is a 1.8 billion pound market in the U.S. alone, and that's about $8 billion a year. What we're doing, we're starting out by building 10 million pound facility. We have offtake agreement for 10 years on that. And we have revenue insurance for 10 years, guaranteeing us to get the revenue no matter what happens with the product. The reason why we managed to get that kind of offtake agreement or purchase agreement is really due to the demand and the lack of a good product in the U.S.
Absolutely, let alone the fear of dying from eating something that you think is safe.
Exactly.
Now you're raising money. Tell us what you're going to do. What is the use of funds for?
Yep. We are raising, totally we're raising $1.7 billion. We do have bank debt for $1.4 billion secured. We need to raise another $374 million. The reason why we're raising the money is that we have pre-developed, spent the money, we've done all the engineering, we have secured all the contracts, we have secured all the insurances needed for 17 products that we have shovel ready. The next phase is just to build those products and get them up and running. We're protected fully on the development. We cannot have any budget overruns by the way we're structured. We cannot have any lack in performance because we have insurance companies that comes in and pay any lack of performance of the plants. So the way we're structured is that we have contracts to guarantee us the future revenue for the next, depending on product, between 20 to 25 years usually. We have structured this whole development as we cannot have any budget overruns. We already have the main portion of the funding secured. So what we're doing now is we are, due to what I mentioned in the beginning and the trends that we see, by raising capital as a token, we have a security token. It's compliant to US SEC laws. And what we're doing is we're raising capital on that. Every token holder will be as a shareholder. But what we're doing is we distribute all the money and all the reports and all the transparency needed through the blockchain to all the token holders. What that will do is create transparency, and it's a needed transparency, especially for the energy industry, but also from the financial industry. So what does it mean? What happens if we don't raise the full $374 million? Let's say we raise $10 million, just as an example. At $10 million, we would still reach our soft cap. The investor would still get the same pro rata return, so percentually the same kind of return. We'll have the same asset appreciation and the same cash flow on their token as if you raise the full amount. You would always have a smaller market cap if you don't raise the full amount. But we have protections in order to protect every investor for that scenario. So what this does is, no matter where you enter this capital raise, if you're one of the first investors or one of the last, you will have a different discount on the price, but you are I should not say guaranteed, but based on the contracts and the projections we have, you will have the same returns on your token as if you're one of the later investors.
Brilliant, brilliant. All right,
Thank
Kim,
you.
thank you for being our guest today. We'll talk to you more as things unfold with your company and the products you bring to market.
Thank you very much. Have a good day.
You too. We've been watching CEO Money with Michael Yorba. Thanks for joining. Don't forget to follow us on Facebook and subscribe to our YouTube channel. Thank you.
Thank you.